afternoon, ladies and gentlemen, and it's nice to be here again to present our latest annual report, Gold Focus 2019. So today I'm going to show you our finding for the gold market in both 2018 and also to show our price forecast and the market outlook for this year. So again, I would like to thank Doklad again to offer this lovely place, and also all the sponsors for the Russian language version, and also the cover sponsors from Welcome. So just to give you a little bit highlights for those who are not familiar with Metals Focus, we are an independent consultancy specialized in precious metals research. We are based in London, but we also have offices and analysts based in China, India, Turkey, Southeast Asia, and we have also travel a lot extensively to all the key markets in order to get a first-hand information on the market. So let's start with a review of the gold price. I think everyone in this room must be very familiar with the gold price over the last 2 to 3 years. Basically, we have seen a price that has been trading, following the bull market over 2013 to 2015, and since 2016 we have seen the gold price started to improve, but since then the price seems to have been stuck in a range. There has been several occasions that the gold tried to break above 3050 or 3060, but each time it didn't manage to hold above the levels. So we have seen, and as we speak, earlier this week, we have seen gold price, just the dollar price had dropped to 4 months lows. But again, we are seeing a price trading within a $100 moving range. So then people should ask, why each time gold has been failed to, let's say, break higher? Or I would say the single most important factor has been the dollar strength. If we can see on the picture, on the chart, that the dollar has remained very strong over the last 12 months. Itself is due to the US relatively strong economic growth, particularly if you compare the US economy to the emerging market, as well as the European, the Eurozone. And also you have seen the trade as a trade wars between the China and the United States, which has also boosted demand for the US dollar and the US treasuries. So if we say dollar strength is the single most important factor that has kept gold upside, then the next one could probably be the ongoing strength, or at least the confidence in the stock market, particularly in the United States. Once you have still confidence in the equities market, it is very difficult to convince investors to move out of this asset class and then to return to safe haven assets such as gold. And I would stress that although last year, in the second half of last year, because of the trade wars, we have seen sell-offs in both the US and as well as the emerging market equities. But this year we have seen both has rebounded, which so on one hand we do see there have been fears about a global economic slowdown, and particularly in China. But on the other hand, the equities market has not so far responded aggressively, and if anything, we have seen the risk appetite has remained quite relatively healthy. And this has also explained that why, if you look at the investors' positions in gold, that you have seen relatively low commitment by the investors. So what we have seen is when the price tanked last year, there has been a brief period of aggressive shorting, but all these tend to be tactical or short-term. And if you look at the commitment by investors from the long side, we haven't seen any material improvement in investors' interest in gold. So that is just a broader macroeconomic picture, which is, let's say, not that positive to gold. And then let's move to the fundamentals, the supply and demand picture for gold. So first we started the mine production. Last year we have seen the global gold output reach another record high. Last year global mine production exceeded for the first time more than 3,500 tons. If you look at the map, well, the losers and winners, China and the rank for top three remain unchanged. China, Australia, and Russia. But you have seen different trends. While China, you have seen quite a second year of quite sizable decline, 6%. Well, this is because of the ongoing, let's say, environmental controls that has seen a lot of the closures of the small mines. While on the other hand, you have seen countries like Australia and Russia have continued to post very strong, healthy growth in local mine output. So overall, we will see probably this trend to continue in terms of global output. And if we take a longer picture, that is starting from the 2010 to last year, over the almost a decade period, we have seen consecutive growth in global mine output. And if you look at within a single year, a low single digit probably doesn't tell you anything. But if we look at the cumulative growth, each year we have around 2.5% annual increase. And then over the 9-year period, you suddenly have seen additional more than 700 tons of supply from underground. And obviously, there will be confused that given the price performance, the gold price performance was not that great over this period. But people often, when they mention or think about the gold price, they think about the dollar price. But if you look at the global mine output, it is widespread. So we should look at the gold price in more the producers' currency terms, which given the loosening or the weakening of a lot of the local currencies, we have actually seen, if we measured in the gold price in producers' currency, we have seen a record high on a global basis, which also tells you why that could help the global mine production to sustain growth over the last few years. And this year we have also introduced a quite interesting concept, which after years of investigation, which is the artisanal mining or small-scale mining. And this has also made allow us to make a quite structural change to the global estimates to the mine production. So at the moment, our estimates on artisanal mining as well as the small-scale mining, annual output is around 550 tons. And that is quite sizable. It's accounting for over around 50% of the global supply. And if we look at where these artisanal mining are based, most of them are based in Africa, and followed by Latin America, and then some are based in Asia countries. And if you look at and also this has also been a quite one of the big drivers of why the global output, mine output, has been rising over the last few years. And if you look at why this artisanal mining has seen a quite healthy growth over the recent years, a number of reasons. population growth in these countries, these developing countries, and the lack of economic opportunities or economic growth has been poor, and also there has been international spread of all these expertise in terms of the small-scale mining facilities. And if we look at on a cost basis to tell you, well, the producer's profitability, we can see that last year the average gold price is just below 1270. So if we on an all-in sustaining basis, which is more on a long-term, healthy, sustainable metric, well, roughly around only 10% of the global producers were actually on a loss-making, which is not bad for a market. Well, if we look at the cash crop basis, the percentage is even smaller, a low single digit. But on the other hand, we do see there has been quite a reduction in terms of capex expenditure among the producers. Last year, from 2017 onwards, we have seen a small recovery in terms of capex expenditure. But on the other hand, the money that the major producers have been placed or spent on the capital expenditure were far smaller, lower compared to the peak that has been during the 2011 to 2012 when gold price peaked. And also what we have also seen is the red line, the percentage by peer group, which also tells you that the reason why the capital expenditure has been falling or remain relatively low is because the majors has been cutting their capex. Well, if we look at on a producers global basis, and since last year we have seen, or earlier this year, we have seen some exciting announcement of the merger among the major producers like Barrick, and another one is also under current consideration at the moment, which could tell you that there could be some more exciting or growth coming in over the next few years. So that is the global mine production. Well, let's talk about the smaller share of the total supply, the recycling. Well, because of the gold price has remained range bound, so it transpires into a similar picture to the global recycling. Well, we have seen the global recycling or the scrap volume has remained relatively flat last year. And so obviously, if we look at our global basis, there are winners and losers. Well, countries like the Middle East, well, you have seen these economic crisis, we tend to see a bit more recycling because people need to sell their gold to gain income. But overall, because the price has been quite lackluster, so has been the recycling volumes. Now let's turn to the demand side. Last year we have seen a more healthier picture on the global demand. And if we look at where this growth in demand coming from, actually the majority of last year's gain comes from the central banks, which I will discuss later. And if we look at the physical investment and jewelry or the industrial application, while the traditional gold applications, the volume, we have seen some modest gains, but it is quite small in terms of our percentage. So starting with gold jewelry. Last year, jewelry fabrication was up by just 1%, and China remains the biggest driver. Well, if you look at the global basis, China and India essentially accounted for more than a half of the global total. And in terms of China, reason behind the increase has been there has been a lot of efforts by the local jewelers trying to develop new products, and there has been ongoing urbanization, which we have seen continued stores expansion into smaller cities. And also you have seen ongoing rise in disposable incomes, although the economy has slowing down. Well, in India, the picture is a little bit more negative, because you have seen more volatile local gold prices. But overall, the picture has been quite steady. What we have seen is that because the price has been remained range bound, and a lot of these countries like China, India, or countries within the developing countries, as the consumers are quite price sensitive to the price. Once you have a product that doesn't tell you the directions, the consumers will be confused. They would like to rather to wait for more clear signs, whether they are ready to bargain on the price drop significantly lower, or if the price could move higher, which gives them a bit more confidence. But once you have a price that's stuck in a certain range, that just have seen a lot of the interest just fade away, or they at least maintain, they have a wait and see attitude. And this year, a picture is probably will be similar, that we will see maybe a marginal increase again, but without a more meaningful price action, the picture could be just remain quite similar to what we have seen last year. In terms of physical investment, for the bars and for the coins, last year global demand was up by 4%, so it's slightly higher than the global jewelry consumption. But if you look at where the gains are coming from, is actually, well, again, if you look at the picture, China and India again are the two largest market for sure, and still accounted for roughly half of the global demand. But if you look at where this investment or the growth coming from last year, it was actually from countries that people are not that familiar with, namely Iran and South Africa. Well, that tells you when you do have seen a local economic crisis, and also you have seen the currency, particularly if you have seen the currency depreciation, there has been certainly a sharp increase in demand for any hard assets, such as physical gold. And then, if you recall a couple of slides earlier, last year we have seen a sharp increase in the central bank gold purchases. And in fact, last year we have a central bank net purchases well of 600 tons. And actually, if you will look at first the yellow bar, the gross purchases were about 700 tons. These were the multi-decade high. It was probably the highest since the collapse of the redwood system in the early 70s. So if you look at the which country or how many countries were buying gold last year, obviously Russia remained the biggest buyer, at least according to the IMF statistics. Russia has actually remained almost the biggest buyer over the recent years. Each year the central bank bought more than 200 tons of gold. While you also have seen similar, countries in the CIS region have also buy more modest volumes of gold. And then Turkey is another example, China. What has been quite interesting last year was we have seen a couple of European countries, such as Poland, Hungary, to start buying. And this marked a fundamental change to a long time. I mean, if you look at over the 1990s and all the start of this new millennium, the European Union as a whole has been a consistent net seller of gold. While last year we had, for the first time for many years, that the European country or the EU country have started to buy gold. And if you look at the reason behind that, I think a clear desire for reserve diversification remain the key reason. And obviously, if you look at, well, countries, they either have low gold reserves in terms of their overall portfolio, or you have countries like China, or Russia, which is already a big gold holder, but they would like to diversify away from the dollar, given the ongoing geopolitical tensions. And on the other hand, if you look at the dark blue bars, the gross sales, although it's still quite small, but last year they have also seen an increase in the gross sales last year. And I would say the majority of these came from Venezuela. Well, the struggling economy and the low reserve, the difficulties with the foreign debt payment has seen the country have continued to sell their gold or use gold as a swap for dollar liquidity. And if we look at in the coming years, we will probably see a similar picture. Well, central bank gold purchases will remain fairly high. So if we look at both the supply side and demand side, supply side, this year we are seeing a modest increase, while all the sectors will see small increase. Mine production, we will see another record high, recycling probably up marginally, and also the high local price could see producers probably continuing to maintain a modest producer hedging. While on the demand side, it is a more stable picture, while the increase in jewelries in China and India will probably be offset by the decline in the central banks. Again, as on this chart, we show a decline in net central bank purchases, but I would stress first is our forecast is 600 tons this year for the central bank purchase, which is still a very high figure on a historical basis. And also, if anything, I would say we tend to be more conservative when it comes to the central bank's policies. So it could be 600 tons, but probably higher. So overall, the supply side and demand side fundamentals, we have seen continuous supply and less growth in demand. So the physical market will remain in a surplus, which tells you that if the market is still in a surplus, then we still rely on the investors to help to push the price higher. And already we have seen signs that there could be more positive stories coming for the gold market. For example, we have seen if we look at the Federal Reserve's minutes, the FOMC meeting minutes, you will have seen that from last year, December, when they raised their interest rate last to March, the latest meeting, there has been a dramatic shift in their attitude. So if you look at December last year, the Fed was still forecasting 2% or 2 to 3 times interest rate hikes this year and next year. While now, or at least according to the latest meeting, they would like to keep the interest rate unchanged throughout the 2019. And actually, I would stress that if you look at the market consensus, there are increasing expectations that the Fed may even announce a cut the interest rate next year, which is a fundamental shift in their attitude, which to some extent suggests that the dollar strength should not be sustained in the long term. And also, if you look at the other areas of the US economy, we have seen, yes, we do have seen a quite healthy economic growth in the United States, but a lot of these growths are based on fiscal stimulus like the lower taxes, more promise on government spending, which will result in a higher and higher US government debt, which is not going to sustain in the long run. For example, we have seen inverted for the first time since 2007, which has clearly indicated some worries in the market. And also, if you look at our very long-term basis, this is a measurement of the price-earning ratio for the S&P 500, and it tells you that the valuation of the stock market of the U.S. equities are very high on a historical basis, which gives you a signal that there could be scope for a correction in the, let's say, maybe not in over the next couple of weeks, but if you look at whether if you started to ask yourself whether the U.S. economy growth could sustain, or whether these corporate earnings could grow like what they had before, then you would wondering the valuation of stock maybe appears too expensive. But so overall, as you can see from the range, that we will seeing the price maybe show some signs of maybe the next leg up towards the end of this year towards 1400. But overall, we are still seeing the price to remain between 1250 to 1350 or the 1370. And in terms of the 4-year average, just above 1300, which is not that high compared to what we have seen in 2018. And that's the end of my presentation. And if you have any questions, or if you would like to have more information on our reports, you could either speak to me or my colleague.
Коллеги, пожалуйста, вопросы. Ну, для разгона позвольте мне, может быть, начать, пока все остальные думают. May I start? First question: central banks and central bank purchases. Is it occasionally happening to New Year, and such a peak will not continue, such a high level of purchases will not continue, or it will continue, and if so, what are the drivers for it?
I think, if you look at in terms of the forecast, I think the first question is probably Russia, because if you look at the number, for example, last year, if we have over 600 tons of gold on global, bought by central bank on global basis, Russia have been buying 200 tons plus since 2014, which is around a third of the global. And So I think obviously there are different. So if we separate the two groups, I would say the first group is like Russia, and I would say also countries within the CIS regions like Kazakhstan and Mongolia, where you have local mine production, and also your local mine production is rising, while you also have relatively low local jewelry fabrication or demand, which is easier for the central bank to buy gold within the local market. Because if you compare Russia to other, let's say, gold, the central banks, let's say, give you another example like Turkey or Poland, well, their local mine production is very low. They need to buy gold in the international market, which means that they need to use their foreign exchange reserves, so let's say to convert the reserves to gold, so which is quite different compared to Russia. So for these countries, I mean, their purchases tend to be, a lot of these countries tend to, they either buying gold over a period, or they have so when they think, for example, they have a target, 2% or 3% of the gold is should be in gold, 2 or 3% of the total reserve should be gold. Once I reach that target, then I stop buying. Or I have a range. I think if gold is below 1250, 1200, it's a good time to buy, then I start to buy. So that's two different ways, depend on, so the second is probably more depend on price. Well, the tricky one is China will sit between. Well, China has a local...
The first time sold gold last year, eh?
Yeah, well, they have sizable, they are the number one gold producer, but on the other hand, they also have a large gold demand. So if you look at, even though they have 400 tons of gold mine production, but demand is well above, around 1,000 or 900 tons per year. So they still rely on imports of gold, which means that when they are buying, if you say the PBOC is buying gold, okay, if they buy in the local market, which means that then more gold will need to be imported, which still requires the use of foreign exchange reserves. Or the PBOC orders commercial banks to buy in the international market, which directly use the foreign exchange reserves. But obviously for them, this amount of foreign exchange reserve is quite minimum, given you have over $1 trillion of US dollar treasuries. So I think for China is more the desire to diversify their reserves remains unchanged, and so obviously they're trying to look at all the different areas to invest their assets. Gold is only one of it, and obviously I guess there are a lot of speculations, I would say, to think that maybe China is buying more than what they have reported. Yes, maybe. I mean, countries like China or a lot of the developing countries, they tend to have their own definition. So what they should, for gold, some gold they retreated as monetary gold, and they reported to the IMF, and some gold they treat as non-monetary or trading accounts. And sometimes you could see China has a tendency in the past, which they have transferred the non-monetary gold to monetary accounts once they think it's ready to publish by to the world. But I think if you look at China, I mean, particularly they announced their first purchase in late 2018 when there was intense, let's say, when the trade negotiation between China and the United States become intense. So that is a clear signal that it's more as a symbolic meaning or to a gesture to show that they would like to diversify their reserves from the US rather than they're buying 10 tons of gold each month.
Thank you very much. One more question, if I may. Continue asking about the talking about the industrial demand and specific application of industrial things where gold use, such as flash cards, such as processors for mining, but not mining, mining in cryptocurrencies, or physical mining. How that demand is big and how long it will be, in your view, how big relation with that demand to the total demand will be in the near future, in your view?
Industrial demand. Industrial demand has been quite stable over the last few years. And if you look at the majority of the industrial application, it was actually used in the electronics applications. Quite, for example, you have the very thin bonding wire, which we will be using as the component for the semiconductors. So, for example, if you use you use your smartphones, well, each phone have a very tiny amount of the precious metals, gold, silver, and platinum, and a tiny amount of palladium. Well, because of the growing production of all the different industrial, the electronics products, so demand has been quite stable. So on one hand, because the price has been high, so we have seen the fabricators trying to reduce the volumes of precious metals content. I mean, in terms of all the precious metals, not just gold. For example, we have seen palladium, while the price has been record high, there also have been fabricators trying to reduce the usage. But on the other hand, the reason why they should use precious metals instead of base metals, because of the good quality of the precious metals, because of you need reliability of the performance. For example, often we have seen these precious metals being used as a contacts or in the conductors in the, for example, in a car for all these safety devices, which can clearly cost, when you compare cost against safety, then safety takes the priority. So that's why we have seen industrial application has been remain quite stable, maybe 300 or 400 tons a year, but not a massive component of the overall demand.
Thank you very much. Еще вопросы?
Скажите, пожалуйста, вот в последнее время мы наблюдали такую картину, да, Китай нарастил добычу золота, начиная там 2007 года практически в 2 раза, но последние несколько лет мы уже наблюдаем такую позицию как бы после презентации добычи и даже его падения. Вот скажите мне, вот прежде всего, с чем это связано? То есть достигнута какая-то уже планка именно в производственных мощностях. Если вот идет такое снижение, с чем это связано? Уменьшение добычи золота и рассыпных месторождений, комплекса. И входит ли в это производство по Китаю производство золота из концентратов, которые Китай закупает, да, в других странах. Китай также у нас является ведущим импортером золотосодержащего сырья, в том числе упорных концентратов, из Австралии, там, из разных стран, да, из России. Учитывается ли это вот в производстве по Китаю? Ну, то, что представляет Metal Fox.
So for the first questions, well, I mean, this is because of China is a very, when it comes to the mining, it's a very, let's say, unique structure of the culture of the Chinese and the local mine production. First, you have, obviously, you will hear the names of like China National Gold Group, Zijin, Zhaojing, these big names, which, but there are only few names which only accounted for relatively modest share of these Chinese mine production. And if we look at the rest of these Chinese gold mines, they tend to be very fragmented, and a lot of these are small-scale mine production. So the reason for that is compared to, let's say, Russia or in a typical Western countries like Canada or Australia, the companies spend years on exploration and then spend capex and then a few years to build the mines. So when from the project has been discovered to when the first gold being poured, it takes quite a long time. So when you could easily see a relatively big size of the mines, well, in China, the time is very short because people like to have quick returns. So which explain once, particularly in the past, when there are not enough regulations by the government. And so there are a lot of these small mines where the small local companies discover the mines, they tend to jump into that place and trying to get as much of gold quickly from underground. So which tells you that in terms of environmental controls or safety, all these regulations are not as, or the compliance is not that strict in the past. But because of, you'll probably read in the media that there has been quite concerns about, from the central government about the pollution. It's not just about the mining sector, it's about all the environmental issues within China, because you have seen the storm and all the heavy smoke within the country. So China has announced several very tough measures to fight against these environmental pollutions. For example, one of the is they have been strictly used cyanide, which is being quite used in the mining sector in China. And also a lot of these small mines, because they cannot meet these environmental regulations, so they're forced to close. So that's why in China there was China is not like South Africa, which has been a secular decline in local mine production for a long time, where China is more big simply because of these environmental issues. So a lot of the mines need to be shut down to either to make change in order to meet these environmental standards. So that's why you have seen a quite sharp decline in last year and the year before. And so, because these decline was driven by, let's say, the macro policies, so which tells you that the decline could be slow this year because a lot of these policies has already been announced and been taken. A lot of smaller mines were already under investigation, and overall, China is probably, I think, maybe given a couple of years, we're starting to see production to rise again. And in terms of the second one, in terms of local mine production, because I think according to the current regulations, in China, the imports of exports of gold or precious gold and gold products are strictly controlled by the government. As far as I know, unless you have mines outside of, overseas. For example, I know like China National Gold and Zixing, for example, they have the mines overseas, which allow them to bring either gold doors or the concentrates back to the country for refining. But other than that, you are not allowed to bring any gold mining materials to the country. And also, if you want to bring gold bullion bars, for example, into the country, you need to import license. I hope that helps.
Thank you. Еще вопросы?
Did you say new, metal focus? But there's a chance that sometime in the future, gold will be again used as a currency, or a currency-backed gold will be introduced sometime. Thank you.
I think it will be very difficult in terms of, I mean, people talk about this quite a lot, but I think clearly there's a reluctance by the central banks globally to move back to the gold standard, and because of which you will restrict your flexibility, for example, like to do any monetary easing, for example. And also given the failure of the gold standard post Second World War. So I think although there are people saying we should go back to the gold currency, but in reality I think it is very unlikely to have that because of a lot of the difficulties that the central banks experienced in the past, and also because going back to that system, the central bank will lose a lot of the power and also the countries, for example, when they want to do, I mean, we all know that the government has fiscal, could do fiscal stimuli or tightening, while the central bank have the monetary stimuli and tightening. So when you go into such a more strict standard, it's become more difficult for the central banks to use to suddenly lose partial, if not any, of your monetary tool to help the economy. So I think it's quite difficult to convince the central banks to do that. But obviously, I mean, there's clear design that they would like to move away from the dollar, which remains the key trading, I mean, the only principal currency in the international payment. I think that's for sure. But whether gold will be the candidate, I doubt it. I think that's why you have seen people of the European Union, of the developed Europe, trying to, gain some more power in terms of international payment, while China has trying to push the yuan, for example. And well, I think so far, because of the economic size, and also because of all the financial system has been the way they have been set, it has become still quite difficult.